미국 주식 포트폴리오에서 가장 뜨거운 이름 중 하나, TMF, SOXL까지 오늘은 이 상품들을 만든 장본인이 저희를 직접 만나러 왔습니다. 세계 최대 레버리지 ETF 운용사 디렉시온의 더글래스 요네스 CEO와 함께합니다. 안녕하세요. Hello, it's nice to meet you.
It's wonderful to be here. Thank you very much for having me.
Thank you for coming. It's an honor to have you and honor to have you to the show. So could you please start by introducing yourself and also introducing about Direxion?
Yes, of course. My name's Douglas Jonas. I'm the CEO of Direxion ETFs. It's my pleasure to be here. Thank you for having me and giving me so much time today. Many people, I think, in Korea know Direxion ETFs from our famous semiconductor ETF. But Direxion, we're a New York City-based asset manager. We're one of the largest ETF managers that covers leveraged and inverse ETFs with a little over 50 billion US dollars in assets under management as of this morning here in Korea. We have over 100 ETFs, 107 ETFs. Most of our business focuses on leverage inverse ETFs for short-term investors, for sophisticated investors, those that are familiar with the compounding effects of leverage, those that are really looking to trade short-term markets. That tends to be our focus, and we spend a lot of time trading headlines. We spend a lot of time educating investors about how ETFs work.
What makes Direxion different from other leverage and inverse ETF providers?
Yes, this is a very interesting space. So when we think about leverage and inverse ETFs, while they've been around since about 2008, it's really been the last few years that investors have been gravitating more towards them. This is because the markets have been more and more volatile, including the last few days, including the last few months. And so a lot of investors are saying, how do I change my behavior? So leverage and inverse ETFs, as you may know, they're not for long-term holders. They're not a buy and hold vehicle. We're very unique in that way. We're for short-term, sophisticated, day trading investors, people who are really following the markets every single day. It's the more exciting part of the market where investors can trade the headlines. So when we look at earnings reports, when we look at news reports, some of the Mag 7 stocks, they tend to be very volatile, both to the upside and the downside. And so leverage and inverse ETFs are a way for investors to express their views very short term. What makes us very different is we are one of the global leaders, if not the largest. And when you think about some of the more interesting parts of the market, the more volatile parts of the market, like some of the Mag 7 names, Google, Tesla, NVIDIA, Apple, this is the area with a lot of volatility, and investors want to be able to trade those parts. So we offer large index ETFs, like semiconductors, that tends to be popular, AI, but we also focus a lot on the Mag 7 ETFs, and we offer 2x leverage single stock ETFs that cover every one of the Mag 7 names, and that tends to be what makes us a little different than some of the other providers out there.
Why do you think you've gained so much attention from global investors?
Yeah, I think the volatility in the headlines are really driving market interest right now. So most of us, we have our core holdings, buy and hold, they're off to the side, but we're watching the markets and we're watching these news headlines across the global economies. Yes, there's a lot of focus on the US markets, but there's also a lot of focus on the global markets. How is inflation? How is job market? What do corporate earnings look like? And these short-term headlines are making stocks move faster and more volatile than we've seen really in any time in recent history. And if I look at this year alone, while earnings continues to be a big driver and headlines like AI, we're also seeing a lot of shocks to the system, transition of interest rate movement, some countries dropping their interest rates, some countries like the US not yet dropping their interest rates. And so those short-term movements are an opportunity for investors to really trade the market, not for their core holdings, but their satellite positions. The fun place in the market, the more exciting and dynamic place in the market. And that has brought a lot of investors to 3x ETFs, to 2x leveraged ETFs, where they want to trade short term around the news, around the headlines. We've seen a lot of investors buying the dip. So far, that's worked to their advantage. And at Direction ETFs, we've had record cash flow for the last 2 years. We've seen record interest in Korea amongst Korea investors. We've seen a lot of investors coming to our website to learn how does leverage work. We have a lot of free resources on our website where they can come do the ETF University and learn a lot about understanding leverage, because it's important. While leverage can help make a lot of money to the upside, it can also lose money to the downside. And that's a very important point. So we want investors to come to us, come to Direction, and learn about how leverage works.
Among Korean investors, Direction products like TMF, SOXL are constantly in the top traded names. In your view, why do you think these products are so popular among Korean investors?
Yeah, you're right. I mean, those two ETFs in particular, they really center around two of the biggest news stories that are surrounding us every single day. Semiconductors, where we're headed with AI. I even hear this morning, I'm in a breakfast, and there's a robot goes by helping to clean up. This is our world. It's transforming around us. The amount of need for semiconductors and the growth of semiconductors is outstanding, and it's growing in a geometric rate each and every year. If we fast forward 3 years, 5 years, do we think there'll be more demand for semiconductors or less?
More.
It's always more, right? We know this. So over the long term, we see the growth. But short term, there's news headlines, there's volatility. The chips won't be available. There's a shortage, right? These things will make the individual stocks really volatile in the short run. So those of us as investors, we're seeing the long-term trend, but we want to trade the short-term volatility to try and make a little bit more money. If when we get it right, it works really well. That's why it's important. We're checking the investment every day. And what's the other big news story? It's interest rates. Post-COVID, we saw a lot of inflation. That means the global economies, particularly the U.S. economy, has raised interest rates, and interest rates are quite high. We're all waiting. What happens next? When will the Fed reduce rates? So we're seeing the volatility in interest rates. It makes that leveraged ETF a little bit more exciting. A lot of activity. We can trade the headlines. Trump will talk about the Fed. The Fed will talk about the Fed. These things will make that part of the market move quickly. So for investors, sophisticated investors that are following the news every single day, these can be great ETFs to trade the actual headlines. And so that's been very exciting, I think, for a lot of investors everywhere, especially in Korea. But it's really happening everywhere. As the U.S. market, the Korean market, the global markets, they're excited about these headlines. And there's only a few ETFs out there that can help you trade them.
Oh, so it's not just happening in South Korea, but it's just like a global trend.
It's very much a global trend. We've seen, record cash flow year over year, record trading across our lineup year over year. And as you mentioned, the 20-year futures ETF around treasuries, semiconductors, and really a lot of the Mag 7 stocks like Tesla, NVIDIA, and some of the newer ones like Palantir, Berkshire Hathaway. They're generating headlines, and the growth is coming really from everywhere.
So a couple of days ago, we've had an election. The new president took the office, and we're seeing quite a bit of rally in Kospi. A surge of interest in your South Korea Bull 3X ETF are going up. How attractive is South Korean market to the global investors today?
Yeah, I mean, as we all know, the growth in South Korea has been incredible from a technology standpoint. From the investor standpoint, we're seeing a lot of wealth generation across the region. And a lot of the big companies are attractive to global investors. They've become household names even in the U.S. market, which is really a positive thing for the South Korean economy. as you mentioned, the elections, it's creating stability, right? And with stability, we become more comfortable as investors.
Yeah.
We become more comfortable with predicting future earnings growth. And so that's brought a lot of investment, as you said, into our South Korea ETF with leverage. We're seeing that really globally as markets are starting to calm down in various ways. A lot more investment and cash flows coming in because there's so many U.S. dollars, Korean won. There's so many dollars on the sidelines. People have been sitting in cash for a very long time.
Yeah.
So they're looking for opportunities for growth. And as you mentioned, here in this economy, we're seeing those opportunities for growth. People are getting excited and people want to invest. When we look at the long-term trend, we've talked about it, AI, robotics, all of the growth around automation, whether it's taxis, whether it's the robot dogs,
Yeah.
right? There's so much automation happening around us. All of it requires semiconductors.
It does.
All of it requires coding skills. All of it requires the amazing technology that's coming here from South Korea. So for South Korean investors, being able to invest in your home market and see that level of growth,
Yeah.
I think is a very positive trend. If we look at the last quarter of earnings across AI and semiconductors, it's been among record growth for all these companies. So again, it comes back to the headline volatility become opportunities for short-term traders.
Yeah.
The long-term buy and hold type of investments we expect should do well over the next 3 and 5 years.
We've noticed Direxion hasn't been launching any new 3x leverage products recently. Is there any reason for that?
Yeah, it's very interesting, some of the history of the 3X market.
Yeah.
Effectively, the rules and regulations of ETFs, particularly in the US market, have changed over the last few years, and it's made it very restrictive for any asset manager, Direxion included, to be able to launch new 3X leveraged ETFs, which is why you're seeing us launch 2X leveraged
That's the reason.
ETFs. So it's become a bit of a regulatory restriction. The nice part is it means our current lineup of 3X ETFs really will never have competitors. So for those that are interested in the 3X leveraged ETFs, they can come to the Direxion website. You'll see our whole lineup of ETFs. It makes it easier for investors because that's it. Those are your options.
Yeah.
If
One
you're
and
looking for
only.
3X,
Yeah.
we have them.
Yeah.
And so it's an easy way for an investor to find the available opportunities. Just come to the Direxion website.
Oh, it's because of the restrictions.
That's right. It's become a regulatory restriction.
Let's move down to single stock products. So how was the demand for big tech ETF like TSLL, PLTU, both globally and also to Korean investors?
Yeah, I mean, can we go one day without a headline in Tesla? I don't think so.
Yeah, a week.
So for short-term investors that really want to trade the stock,
Yeah.
as you mentioned, leveraged Tesla has become the go-to name in the Direxion lineup of ETFs. Palantir, of course, making the news more recently. We're seeing a lot of cybersecurity.
Yeah.
We also have an ETF that covers Palo Alto networks. That's hit the news recently. So, we have a really incredibly smart product team at Direxion that's been there for a very long time. They really look to the future. They say, where are we headed in 6 months, a year, 2 years? What will be popular?
Yeah.
And let's build some leveraged ETFs around those names. So if you look, we've filed for over 100 new ETFs for the next year or two, but we've also been launching pretty quickly, over 10% growth in our lineup in the last 6 months. We're really trying to focus on what's next. What are the big names that short-term, sophisticated investors want some leverage and they might trade on them. But popular, Berkshire Hathaway's made the headlines. We have a Berkshire Hathaway. As you mentioned, Tesla's always been one of our most popular. NVIDIA has been very popular.
Yeah.
Also, more recently, there's a lot of news on Apple. They're having their big conference this week. A lot of news coming out, whether you bullish, bearish. So that ETF's also starting to trade a lot more. We're seeing it in Micron Networks, right? These are the headline names,
Yeah.
the names that you're talking about every day on this show. These are the ETFs that we launch so that for those sophisticated investors, they can come in and trade the headline.
We're always excited about what's going to come next. Could you give us a hint of if you have any and plans of launching anything?
Yes, sure. So I can't talk about direct products that are in public registration, but we've filed for over 100 new ETFs to come to the marketplace. So we're quite excited about the world around us. Those are public filings, so if someone's super excited, they can go look and see what we're launching. But you can expect the themes we're talking about here is what we'll be circling. So growth in AI, growth in technology. These are the types of ETFs we're focused on. Also cybersecurity. This is coming up every single day. We see this around us. All of our institutions, whether it's a banking institution, our company, our personal email, right? Cybersecurity is so important to all of us. And you see breaches happening every day. The companies that focus on protecting us from the world around us when it comes to cyber, these will be some of the biggest growth opportunities for the next 3 to 5 years. So you'll see, of course, direction levered ETFs around that part of the marketplace, because we know this is so important to everyone. So we all have to make investments in that, whether it's at the individual level or at the company levels as well.
I made a note on that. Okay, so let's move on to the macro environment. Do you believe tariff will remain a negotiating tool, or will it be likely to be a more aggressive policy coming up?
It's likely more of a negotiating tactic. At least that's what we've seen so far. You know, the forced conversations around tariffs, it makes all of us come to the table, and it makes the global leaders come to the table to have a conversation. We know this is a global economy. We all work together closely. It's become easier over the last decade. You know, we're buying, you know, not just investment vehicles, but we're buying products from each other across countries. And so the conversations around tariffs can be hard because they're creating economic shock and they're creating short-term volatility. We've seen more headline moves of our major global indices this year. I think that they've been bigger than any time in modern history. That can be painful for the short term, but over the long term, these can be very large buying opportunities. And we've seen that in the last month. If I look at last month as an example, the semiconductor index had some very large historic drops earlier in the year. In the last month, it's been one of the highest performing parts of the market. So for those short-term investors, you know, buy and hold, it's fine. Put it to the side, ignore the volatility, that's okay. But for a sophisticated investor, they're seeing these volatile drops and saying, these are big buying opportunities. And so far they've been right. We never know the future, but so far they've been right. Last month, I think the semiconductor index was up something like 30%. Right? It's a tremendous move for a short-term sophisticated investor. So while we might not like at the personal level, we might not love the markets bouncing so much. If you're a sophisticated trader and you're trading short term, this is probably your market, right? This is for direction lineup of ETFs. This is direction weather. This is the type of time where short-term traders, sophisticated market timing individuals, this is where they're looking to make short-term transactions, and the direction lineup of ETFs can help.
We need to be very busy.
We need to stay active, and we need to stay up on the market headlines.
If a more aggressive policy comes out, where do you see the ceiling for the long-term treasury?
Yeah, I mean, the reality is the long-term treasury interest rates in the United States where they are, we've probably seen the peak. I think if we look across why they've been so high because the U.S. market has had tremendous inflation, and the Federal Reserve had to step in, raise interest rates to try and slow things down. Whether we like some of the economic changes or not, the general attitude, though, around tariffs, around some of the policies, it's actually slowing down the U.S. market. Is it slowing it down from such a high pace all the way to the next leading economy? No, but it's slowing down enough to remove a lot of the inflation from the market. So the likelihood, and we're seeing it most recently is this past week with the jobs report, we're seeing the U.S. market cool off a little bit, which should give the Fed what it needs as a leading indicator to start to reduce interest rates. So it'll be very interesting for short-term traders that are trading the Direction Treasury Leveraged ETF,
Yeah.
we're likely to see a lot of volatility in that space because probably the next few leading indicators that come out on the economic market for the US are probably going to start to point towards a reduction in inflation, which would give the Federal Reserve an opportunity to start to reduce rates. So you're starting to see the policy shift across the big banks, across the analysts. They're starting to say, oh, maybe we'll see a rate cut very soon.
Yeah, they
Maybe we'll
are.
see 2 by the end of the year now. That's a big change in the last week.
Yeah, it has.
So again, if you're short-term trading these markets, you need to watch them daily because there'll be a lot of activity. It also could be an opportunity for short-term traders to really start to think about stepping in because likelihood of interest rates dropping are starting to be priced into the market pretty quickly.
As you mentioned, many global investment banks are actually raising their year-end targets for the S&P 500. What's your assessment for that?
Yeah, we feel at Direction, we're in line with most of the analysts out there. We think the markets generally are very healthy. We're seeing that play out in earnings. Fundamentals have been quite strong, particularly in technology, AI, cybersecurity, semiconductors. All these areas are really doing well from a corporate profitability. Just recognize that the volatility of the headline is real. And we're seeing a lot of movement. So for short-term traders that trade leverage, this is a great opportunity because you can really trade these types of headlines. We don't think, even though over the next 3 years we think the markets will do this and the S&P 500 will rise, right? So we have our 3X S&P 500 that's done very well. We do think it'll be a choppy market along the way. We don't think it'll be smooth sailing.
It will be like this.
That's right. That's right. And so if you're trading leverage, you need to really keep an eye on the markets. You need to be ready for both the bull and the bear because the markets will have a lot of headlines along the way. Yes, 1 year from now, I think comfortably the S&P 500 is much higher, but it won't be as smooth sailing. It will be choppy along the way as we see headlines, as we hear about tariffs, we hear about interest rates, maybe Elon Musk and Trump argue some more, right? Maybe someone else decides to have an argument. That's going to create choppiness in the market. Great for short-term investors, quite annoying for a long-term investor that's just buy and hold. But if you're trading leverage, these are the markets you're looking for. You can trade multiple percent moves in a single day. That's the lineup of Direction ETFs for sophisticated investors.
In a scenario of US dollar weakening, what defense strategies should we take?
Yeah, it's a really good point. I mean, the US dollar has been so strong for so long. So we have to think about what are the general impacts if the dollar starts to weaken. It also, you have to ask yourself, how much will it weaken?
Yeah.
If it weakens a little bit, there's probably no change to the global markets. The US investor and the consumer has been so strong for so long that we might just see a no change event. And what I mean by that is, if you see the dollar weaken, but you also see interest rates come down at the same time, US spending power will increase and they'll probably end up offsetting each other. So just the fact that the US dollar weakens might be no economic change or no impact to the global markets, again, as the US interest rates drop. So again, goes back to the same conversation. Probably the long-term trend is still quite positive, even with a slightly weakened dollar. But the headline news will be bounce. And we have to be ready for that choppiness and the bouncing. Good opportunity for those that want to trade leverage, but it means we need to look at our positions daily.
Until now, big tech has led the stocks. And from now on, will it move down to Russell 2000? And if so, what sector will it go down to?
Yeah, I mean, when we start to bring up the story of small caps, it seems like every single year someone says, oh, this is the year for small caps. And then it's not the year for small caps. We heard it again this year. We started to see a little bit of a rally in small caps. I just don't think this is the year again
not yet.
for small caps.
Wow.
Maybe mid caps, maybe we'll start to see some movement there. I think the dynamic and the growth is healthy. It's just the investor interest really hasn't gotten there yet. there's still so much growth in the big names, right? When we look at earnings this last quarter, everyone's done exceptionally well across the board. If interest rates start to drop, which we think we'll see, those companies, the larger companies perform even better, right? They have cheaper cash flow, they can invest faster, consumer demand isn't stopping. You know, we look at the trade shows that we're seeing, it's new technology coming out every day that's fascinating, that we all want. We're excited. Who wouldn't be excited to have a robot, right?
I would.
Yes, me too. So I just don't see the large caps starting to underperform. We think large caps are here to stay for the time being. And the market, when we look at the global market, it's only getting better for large caps. Not to say small cap, mid cap won't perform. We just don't think that 2025 is going to be the year where they outperform.
Oh, that's interesting. So while you said about large big caps, NVIDIA is one of them. And NVIDIA had a historic run, and many feel that it has gone so high that there will be some limits up there. And they're finding the next NVIDIA. Some are saying it will be Broadcom or AMD. I'm wondering what your view is.
I think in general, everyone will perform here. We like Broadcom, we like AMD, we've got leveraged ETFs for those that want to trade them short term. It's so hard to predict the future and when the slowdown will occur. What I always look at is the whole economy and the global growth. If robotics are real, which I think we're seeing the videos, right? We all can see the videos on our phone, they're real. Well, do we believe that people won't be interested in automation, automated taxis, automated robotics? I think we're all interested in that.
I want to ride a robotaxi.
Right? And so all of this is going to require powerful semiconductors, powerful chips. So yes, I think some of the new names will actually start to perform really well and maybe take their new share of the global growth. But I don't think there'll be a slowdown in the purchases of NVIDIA chips either. We need as much computing power as possible, whether it be the automation side, big data, AI, all of this requires powerful computing. So I think the excitement is still there. I don't think there's a change in the growth potential for any of these companies, large or small. For an investor, though, what could be exciting is look for the peripheral. What else is out there? Will it require real estate for servers? Will it require power for those servers? Will it require new utilities for those servers? Asking the next question to say, hey, if we all agree the growth will be there, who supplies those companies? Are there rare materials, rare earth? Is it mining companies? Do we think that silicone, right, lithium, cobalt, are there new opportunities that surround the economy that we could also trade in? That's exciting, that's growth, but we really don't think the slowdown will be there for some of these big names that have performed so well, because the future looks even brighter when we start to put it in large economic macro context.
Turning to Tesla, there's going to be a robotaxi event, and I'm just wondering, where do you see the next growth momentum for Tesla?
Will you be there?
I want to.
I also would like to be there. So for whoever's in charge, we would like our invitation. Please send our ticket our way. Look, it's a very exciting market. You know, there's a lot of people wondering, has it been priced in? Has it not been priced in?
There's a lot of...
We don't know the answer to that. But what we would expect would be when one robotaxi hits, then it becomes 10, then it becomes 50, then it becomes 100. When one robot dog becomes common, we'll all want the robot dog. So our expectation is the growth is real and the growth is there. But Tesla has a lot of competitors, you know, the
BYD?
The BYD, if you've ridden in one, they're very nice.
Have you?
I was in one yesterday.
Oh.
Yeah, it was a very nice vehicle. So Tesla has real competition. So Tesla's interesting because it's beyond just the car. They're invested in other things. There's some exploration. It's a real question, but the growth seems there. But then Elon gets into a fight with Donald Trump, and then we all wonder what's next. Exactly. So again, predicting the future can be really hard. What I can tell you is that there will be volatility, without a doubt. So for a long-term buy and hold investor, I don't have much of a prediction for you.
Yeah.
For a short-term, sophisticated trader who wants to trade leverage on Tesla, I can tell you there will be a lot of opportunity in 2025 to trade the bull and to trade the bear. And we know the stock is going to be extremely volatile. If you're willing to look at your investments every day, if you understand leverage, if you understand compounding, this is a great opportunity for you to trade both the bull and bear in terms of leverage Tesla this year.
So for long term, it might be hard, but it will be good to find opportunities in the volatility.
That's exactly right. If you want to wake up every day, see what's happening, trade the
news.
bull, trade the bear,
Yeah.
then there'll be a lot of opportunity. If you do not want to do that, then maybe leverage is not right this year.
Okay. Leveraged and inverse ETF are powerful tools. I know that, but there are also some unique risks coming with it. What advice would you give to our investors?
Yeah, so first and foremost, if you've never traded leverage or inverse ETFs before, just come to our website. We have a great tool. It will take a little bit of your time, maybe about an hour. You'll become fully educated. You'll know how they work. Then you can make a good decision. Is this for me or is this not for me? Leverage can be great to the upside when we are right. It can, so we can make a lot of money quickly. We can also lose a lot of money quickly.
Yeah.
So for investors, it's very important. If you're sophisticated, you're an institution, you understand how leverage works, fantastic. Direction ETFs, they're for you. If you're not sure yet, just come, learn. The resources are free.
Only 1 hour.
Only about an hour,
Yeah.
sometimes a little faster, depending on how much you're familiar with the markets. There's a lot of education out there that can help you understand. For those that are day trading, you understand the volatility, you understand leverage, direction lineup of ETFs can be very useful toolkits or tools for you in your toolbox.
You've spent about 30 minutes in the show. Do you have any last words that you would like to give to our Korean investors?
Yeah, first and foremost, thank you we've earned a lot of your trust in business, and we appreciate that very much. We think about it every single day. I can promise you the leadership of the team that's here. We're here to listen to you. If you have ideas for us, you have new parts of the market, you're saying, oh, I wish Direction would build me some leveraged ETF, please reach out to us. We're looking for all of that. The market here is so dynamic. The Korean investor tends to be the most sophisticated investors in the world. They're plugged in, they're reading the news, they're watching, they're aware of the global economy. Those types of investors, the Korean investor, they're Direction investors because we are also plugged in and watching the markets, and we like the markets. We find volatility exciting. And so, the more we can work together, the more we can support each other. We're here for you. We're here to support you and listen to your needs and provide as much education as possible. But first and foremost, thank you. Thank you for your trust and thank you for your business.
Thank you for sharing your time with us.
Thank you for having me. It's been an absolute pleasure.
Thank you. 월가 거장의 깊이 있는 분석과 한국 투자자들을 향한 애정어린 조언 함께 들어봤는데요. 관세와 같은 불확실성 속에서도 AI를 동력으로 한 미국의 빅테크 기업들의 성장 스토리는 여전히 유효하다는 긍정적인 전망 확인할 수 있었습니다. 특히 엔비디아의 다음 투자를 찾는 분들에게는 브로드컴과 AMD와 같은 새로운 기회에 대한 힌트도 얻을 수 있었는데요. 위기는 누군가에게 기회가 됩니다. 오늘 얻은 월가 인사이트가 시청자 여러분의 포트폴리오에 새로운 기회를 열어주는 열쇠가 되었길 바랍니다. 오늘도 함께해 주신 여러분 고맙습니다. Thank you.
Thank you so much for having me.
Was it